Good morning, everyone, and welcome to the European crossover webinar for NFP Day. And we're actually seeing the cable really start to go on and move. You can see here we've gotten past this 29.89 here on the cable. Really trying to go and make a move here. Just happened just shortly. Let's go and take a look quickly on the daily. Move this out of the way. Coming into this key zone, that 30.27, pull this back, make a run for that key area again. That's been a bit of a pushback previous to this. We admitted and had that zone in here before, and this is where the market had run out of gas at the time. I think we were looking at 30.36 as resistance. I think we had moved it a little bit higher, and then the market just fell or pulled back, failed at this zone. But we do have NFP today. We'll go on and get into that and look what the expectations are. They're looking for 191,000. Last month we had 157,000, and also unemployment rate of 3.8. One of the things that I like to focus on is the hourly earnings coming in here with right here, average hourly earnings 0.2, or average earnings rate 0.2. Last month, let's see how that comes out. Obviously, we'll if we can get back to the 0.3, that'll certainly give the dollar a bit of a boost. I'm not so sure, how we're going to come up on this 191. The market, the employment overall has been pretty steady Eddie, coming in anywhere. This last month was a little bit of a dip in the concern, although it didn't impact the dollar that much. We'll see how this plays out. Obviously, once again, the key driver to me is going to be average earnings, average hourly earnings right here. We want to see a little bit more of a gain. If we were to see something like 0.4, then you'd really see this dollar, strengthen. But we'll see with this. I think this will be key once again. The headline number is the headline number. We'll see if there's any revisions. Revisions would be key if there were some upside revisions from the last month, because this number came in a little bit weaker. Or let's say it was downside, then that would show a little bit more concern. Just hold on, move this out of the way. As we noted here on the daily, the cable's making a pretty nice run up here, right into this 30.27 that they had some struggles with the last time, and we've seen this quick jump. Let's back over here. We saw a pretty nice pullback in the yen. The yen actually came right into our buy chart support. I think we came in right to the tick on that, actually. Take a look at this quickly. We had 1038 as our buy chart support. We were still looking for a breakdown, but 1038. And looks like in the Asian session, we actually stopped at 1038, right to the pip, 1038. We already talked about this. This has been a tough market to trade. Finally, we started going and slide back in here with the dollar yen. We talked about the key thing was at 1136 on a daily close, and we still kept the pivot up here in case we were to make a march with this dollar index, but it wasn't to be, although the 1166 had been our key pivot. But we're going to cover some quick news just ahead. One of the keys, we saw the Aussie dollar make another dip. So we'll just take a look at that quickly. Aussie dollar falls to 2.5-year lows as the trade fears hit sentiment. Australian dollar fell its weakest level in more than 2.5 years on Friday as fears over an escalation between the U.S. and China concerns, while safe haven currencies such as the franc and yen gained. One of the things we did go in and finally see yesterday was a pullback in equities, And that certainly got the yen on the bid as a safe haven currency. We don't want to spend too much time on the news. We're just going to hit a couple of headlines. Sterling, well, we're seeing an upside in the sterling right now, and the concern was, that we had such a big drop. One of the things was that made sterling where they can go on a goosey stops is we talked about earlier in the week, people saying, hey, it's not priced in. We can still have things really turn back for the sterling, for cable. And we did get the headlines. Germany was kind of making things a little bit easier, or what they thought, what their demands were going to be. They wanted to have a good relationship with Britain. We got a pop, and then they turned around and did an about face and said, well, we're sticking to whatever the Eurozone is. As far as working out this whole Brexit issue, we quickly saw this back down, and we gently started working up. And I think this is just a matter of the stops being taken out, because anybody, we're still going to make a dip, had to have their stops just above here, and I think they just got clocked out. We'll have to see what's made of the market. We know that at least on our 2-hour chart, we have 3056 as this pivot. You can see the importance of 3056 here, but right now, we've made a pretty good run here. There's 31.27 on the daily, or 30.27, kind of easing back a bit, but we'll see how this all plays out. And then lastly, once again, just a quick overview. Eurozone Q2 GDP growth confirmed at 0.4 despite negative trade. The Eurozone economy grew at 0.4% in the second quarter, the statistics office has said. Changes in inventory, household spending, and government expenditures each contributed 0.1 percentage point. However, while exports rose 0.6, imports also increased by 1.1% during the quarter, meaning the net impact of foreign trade on GDP was 0.2 percentage point. Net trade was also negative in the first quarter. And German economy expanded by 0.5% during the quarter. There are no figures for Ireland and Luxembourg at the time. Let's go and move this out of the way. Don't get ready for the announcers today. Like I said, they're looking for 190 or 191, 3.8 on the rate. I think what you're going to be looking for is if we can improve a little bit further on average hourly earnings, which last month came in at 0.3. That probably helped the dollar from paring back when the employment number that we got was 157. Once again, we'll be looking for, are there any revisions, upside? Maybe it was a downside revision, and also I think also the average hourly earnings. So 3.8%, I don't think that makes too much of a difference. It's just what they're going to go and look for. The market's forward looking, so if we were to go in and see average hour earnings stay at 0.2, that'd probably be a little bit of a downer for the dollar, or worse, if we were to start to see that pair back, then that would the thinking would be, or the perception would be, that the Fed would be able to ease a little bit, and maybe even though they're expected to raise rates again shortly, it would probably put a little bit of a pause, and that would actually work against the dollar. So let's go on and take a look at where we stand here. We'll start with the euro. And let's go and take a look here at the daily. The euro's fared fairly well overall. Obviously, NFP is always a big day. And we'll see if we can finally get some kind of a move one way or the other. My thinking would be is that the market has held up very well. I thought there was an opportunity when we were squeezing up here that we could even make it at the time on the move, maybe as high as 1780. Initially, was down here. I thought, okay, move to 1550, maybe a little bit better is going to be good. But we kept on pushing. I thought we might even reach all the way to a 38%. But the market pared back. But overall, it's held very well. It's held this 1552. We got a nice little mini hammer, and the market's held very well. So when we look at where we're looking at potentially for some support on a pullback, let's go and move in here into the 2-hour. If we were going to get a good strong number, certainly the euro's paring back, acting like it's on its back foot at the time. One of the things that we like to do on NFP day is we do like to go in and widen the supports and the resistance. If you put them too close, you get a good number. People can get shaken out of their trade ideas rather quickly. Sometimes you get a good number, and that number is eventually faded. So when we're looking here at the euro, I think if we were to get a good number, I think initially, I believe it's going to be right in here is 1564. Now 1552 is key, and that's going to be, it's almost working like a pivot. So I think on the way down, certain numbers here like around this 78-ish, 64. I think you would see this more. I believe you would see more traders come in, and whether they were short, I'm not sure how many people would be short, but I think that you'd look for the market to quickly defend 1552. Doesn't mean we'd make it all the way down there, but when we're looking, as I said, during NFP day, we like to widen out these support and resistance levels to so we don't get caught with our pants down or get thrown off. We see a market react, could end up making a move towards this area, maybe even down to 1562, and then by the end of the day, you see the market trying to march higher. So any moves towards 1552 right here, look for them to be defended well. Matter of fact, we're going to go in. There we go. We want to stand out a little bit. I think that's going to be a key area if the market gets on the defensive. $15.52. Take a look on the daily. What's going to be important for the market to go in and defend? 52. To keep the upside going, it'd be important for this market if we were on the backside. Would be important for on a daily close to defend this 1575 on a daily. But for right now, like I said, we're going to go and leave this alone. Now on the upside, and we may not see that till later. This would be all the way up to 1701. Would be the key daily close for this market to go much higher. Now, when we're looking at it here for the resistance, well, it's going to be the 1673 right there, 1673. We'll call it 1674. I think we had marked off yesterday already. There you go, 1673. Anything in between, you can get knocked about. I think that you can just get on both sides of the market. They can use a run up there. Let's say we get above these highs right here, right there, that 1660. You can see the market probably going, you know, sell longs into that. You can, and then see the market pair back, make a move to hold, and then we'll end up finishing the day going higher. But initially, and that's not that far away, but I think you'll see some resistance come in. 1670. Well, just let's take a look right here. You see this? Show you exactly what I'm talking about. See this low right here, and just above that high there. Let's just call it 1675. Just above there, 1675. That's going to be our resistance. Anything beyond that, then, like I said, you could end up seeing, if let's say that the number comes in weaker, you could see, I think, a quick move to that area. Then you may see the market fade it, and then that would be the challenge for the day. If they can get back above that, if that scenario is the way the market wants to go and play itself out. I still think that the dollar's susceptible, and we'll get to that in a little while, but that's going to be our key resistance and support levels. Once again, we have those wider on NFP days. Let's go and move into the cable. We've certainly seen a pretty good move here in the cable, and one of the things we talked about here as we came on to the show was the daily. This is right where the market had run out of gas last time, which was this 30.27. So think of it this way, 30.27 is big for them to get a daily close above 30.27. So let's go and mark that off. That'll be key for the upside if we can get that close above that level. And we know, as we pointed out just a little while ago, 30.56 has kind of worked like a pivot here. So when we look at resistance, it's going to be actually all the way up to 30.83. 30.83. So this thing gets plugging along. This is where I think they would have some trouble, right there at 30.83. And let's pull this back. Right here. See where these closes are? And that comes in with this low too. We're right there. Right there. 30.84. 30.84. Looking in for support, well, certainly things have turned around for the cable. I think on any pullbacks, people are using those opportunities to try and cover any shorts. So I think those are probably more than likely to be well defended as we're starting to push higher here in the cable. Any moves back, we'll go right there. Now, it might seem like a stretch, but we'll see, which would be 29.38. 29.38 right there. And let's go and move in now to the Aussie, which made another low. It's trying to hold those lows. There's that 71.50. We're actually going to go and keep the 71.50. Well, I think we may have had it at 45. No, 71.50. We'll keep the 71.50 in the Aussie. Last couple of days, people have been talking, this thing is oversold, it's oversold. But here's the problem. The momentum, we mentioned it yesterday, continues to be lower. So although it's not making, it did make marginal lows, but and it didn't keep on power lower, but this market's just in a lot of, this pair's in a lot of trouble, and it just can't seem to pick its head up off of the bottom. Looking here on the daily, I think we even here we'd have to move this much lower. Resistance would come in right there, coming across. Right there, just above this area. So resistance now would come in 72.76. See that right there, 72.76. move that just a hair higher. I think we have to change the cable, at least for now, to change that to range. We'll see how the rest of the day plays out. And certainly I wouldn't say bullish in any respect whatsoever, but it has started to get in a rangy mode. Let's go on and move into the Kiwi. Oh, we did have it there. We still have the slowdown here. It's actually faring a bit better, and I'll say a bit better than the Aussie, but for the support level we had, we're going to keep that there at 65.25. It's didn't make marginal lows the way the Aussie did, but it's still under its own dark cloud. I'm actually going to go and keep the resistance. I don't see any reason to change. I mean, both these pairs continue to be woefully weak. And there's nothing that's really changed other than it's holding up a bit better than the Aussie. The Aussie's made new marginal lows, but it's not come apart, but both of them remain under a true dark cloud. Resistance there, you can get some sort covering, but the resistance is going to come in, and we can actually go with this level right here. You see that? It's just a bit higher. That's 68.80 there, 68.87. So let's move this a little bit higher. So if we do get a dollar pullback, resistance is going to come in at 68.87 for the Kiwi. And we'll move into the dollar CAD. Now we did see the Canadian currency weaken. Not weaken, I mean the dollar CAD weakened, but the Canadian currency itself strengthened. Well, we have gone and broken out of this, so any dips back down here are going to be supported until things really start to turn around, if they do. But for right now, it's on a bullish mode. Now, we were stuck here in this 3206 area here. We actually had our resistance, I believe, a little bit higher yesterday, 3254. So we actually had it lower from the day before, and we moved it up higher, up to 54. They made it appear to 3227, and before things started to turn around, they hung up. But they've been hanging around this area here, 132. I guess they goosed some stops, and then finally turned around and came in. Now we came right in here into this area here, the 50%, we got past that. Now, looking back, where we would find some support, if we can get it to confluence here with this trend, let's take a look at that. $30.97 is at 38%, and we got 30.57 as the 50%. So we're not that far away from here. I would look for this market potentially to go on and break down really, which would test the support line down here to the 50%. So let's move this lower. Okay. If we do see that weakness with the dollar, we're going to go and impress a little bit lower. Now there's some demand here. Here's our 3087 that we have for support, but I'm actually going to put the support resistance or supports right there, and just above the 50%. So we're going to go 3067 as a downside target, with 3057 being the 50%. Let's go with 3067. Just 20 pips lower than we had before for support. And the upside here on dollar CAD. We're going to go right here. Going to tighten it up quite a bit. 3181. Right there. I think any moves going above that way, they would try and fade it. So 30 pips, about 50 pips higher. Get a good NFP. So let's go with 3181. Key, you can see right there in the daily close. There it is, 3181. You see that? 3180.5. That would be key on a daily close. So see, that confluence is a daily close right there with that 3181 we're looking at. So yeah, it'd be huge. I would look for the market to fade against that. Or that would be the technically speaking, that would be the play there. Let's go and take a look here with the dollar Swiss. We're certainly weakening again. We had 96.23. Well, we're actually going to move this down here to this 95.90. You can see here, good, decent little area here, and an area where they could shoot for. They could even go beyond that, but we're going to go with that 95.90 for our support. This market has been weak to start with. So it's going to be 95.90. And on the upside for the Swissy, which has continued to stay very weak. Certainly, with the weakness we've seen in the equities, there's a little bit of that safe haven demand already with the Swissy and the yen. So upside's going to have a tough time, I would think, getting beyond this 97.25. Right here. So we're actually going to lower this to right there. See this little close here? Shit, got the wrong one. I meant to put it right here. That one, which is just above that area. That's going to come in at 97.31. Oh, wow, we saw the euro just kind of dip down to 116. Right here. Definitely under pressure, so I guess they're bidding that dollar up thinking that they're going to get a good NFP. And just a quick moment. Okay, thank you. And let's go on and move into the dollar yen. One of the things we talked about with that dollar yen was the key significance of that 1136. We actually saw this market breakdown. Here was yesterday's bias chart support, 1038. We hit it just to the pip. The key has been on the dollar yen, and I've been saying for about a week, I don't even know what the heck it's been doing up here, but it is what it is. But the key's been this 1136. And that's why I had the door open that, you know, technically if it retains that, that's the key area, 1211. But it finally broke down yesterday. I think one of the things that helped break it down yesterday was the weakness that we started to see in equities. And that certainly drove some demand. Now, there was a report that the administration or that Trump was thinking, they mentioned, spoke to a Bloomberg reporter. He was thinking about starting to look at, you know, having a trade tiff with Japan regarding autos. So we'll see how that all plays out. But certainly I think this drop in the dollar yen had more to do with what we're seeing in equities. So, but that being said, like I said, so now resistance would have to be right there at that 11, right there, call it 1139. 1139. When we get a little bit of strength, so we're going to actually call that our resistance. It's just above that key daily, 1136. I think it's losing its significance at this point. So this is going to be 1139. Right there. And for support, well, we hit this just right to the pit, but I still think there's still that opportunity for some demand. If you decide to goose stops a little bit more, it's going to come in right there at 110. We actually did real good. This was a few weeks back, and I had the support. I think it was at 1005. And the low was 1004, something like that. So we'll just stay right here with this 110 for support. Well, not stay, but that's, well, you know, that being a key area. So that's what we're going to go with. So put it like that to avoid any confusion. Let's just say 110. It's pretty obvious, but might confuse some people by just putting 1000. To avoid any confusion, we're going to say 1001. There we go. Now let's go with the cash dollar index. This is a trade on either side of 95. We've had all kinds of reasons, Armand, the ability for the dollar index to go and move higher, and we'll see what happens. I mean, this is kind of like another last chance to make a run, but it seems like no matter what they do with it, it just doesn't want to move higher. You already had these comments before where the market had every reason with the Fed hiking and hiking and great economic news, and Fed chairman gives his take, and everything that could push the dollar higher would move it a little bit higher, but quickly would give those gains back up. here, and then here, and here. It really wasn't until the whole Turkish lira story came out with the Turkish, with concerns for exposure for Eurozone banks that I was saying is it basically went up on default. Now we've turned around and slid, and it seems like every rally back ends up fading, although it's still holding. On the upside, let's take a look at this on the intraday. To me, it's right there. It's really actually, there's different areas. There's 37 and 47 is what I'm looking at, 37 and 47. If we get a good BAFO number, it could make it up to 94.47. This key area 50. On a 2-hour close, to get things back up again, we have to get above 95.57. I don't see where it would make it up that high, but we could cause a, hit a few stops. So we're going to have to respect that. And that's going to be 95.57, a lot further than what I would think that this market could go. I think the key areas here are going to be 37 and 47, but we got to respect the technicals. So if we were to get a great number or something, we could see some pressure in the euro, although I think eventually it would be defended. I think that could, that might take us all the way down to test 15.52, and that would probably equate to us coming up here towards this 57. So 57 is huge. Once again, we like to widen our stops on NFP day. So actually, I've already got it in place. Look at this, 95.58. On a short-term basis, I have to say medium-term, short-term, mean, when I say medium-term, meaning as far as 3 to 5 days, I have to say we're just ranging it. That's it. Support on the cash dollar index. If we start to break, I think it could go in and break. I still think that eventually there's a move down here, this 94.2, and we could even come down here to this 72. We'll pull this out for a little bit better perspective down here. And that's just a plain old correction. But for today, I think you'd see some demand come in at 94.37. That would allow it to take out the lows. But there's all kinds of little levels here. So if we start to break, I think you kind of hang on and see how far they want to push it. But I think you'll see some demand. They could take out the lows here. We also some demand here at the 50. But I'll go with 94.37 as an area where the market would start to see a little bit more balance. So we'll go to 94.37. If we do break, like I said, we like to widen these areas here to encompass or take into consideration the volatility that we could see. I've noticed over the last few NFPs, we haven't seen like the huge volatility you used to see. And I'd say it's probably been at least 6 months or so. I mean, the wide swings, and I see swings that will go up and down. I guess we are now with the whole idea the dollar's been on a good move higher. Even when it gets knocked back, they'll buy it. But we'll see how things going to play out. We'd have to probably materially turn things lower for the dollar. We'd have to see, and we'll go and pull this back in. We probably have to go in and see, last month's came in at 157. We're looking for 191 on the poll. We probably have to see some downward revisions for this next month. Let's say that we came in at 150 again, and then we saw a downward revision taking this down to 125 or something like that would cause people to rethink how aggressive they believe the Fed would be going forward, and also would be key average hourly earnings. I think we need to try and recapture this 0.3. If we don't capture 0.3, it's going to put the market a little bit on a negative. If we were to see something like 0.10, oh boy, that would really start to spin things around, and would people would be looking as to how far the Fed could go on hike. I think the thinking would be, yeah, they'll hike again for this next meeting, but now the thought would be, hey, maybe there'll be more of a focus on taking a pause, and the next hike down the road, the thought would be, oh, that's going to be put on hold for a bit. But that you'd have to have that kind of material change for the market to go on and see that, and that would put the dollar under pressure. And then I believe then if that were to take place, that's where people start to see the glass is half empty, thinking, well, then you might get people saying, well, you know what, it hasn't rallied as much as you would have thought it would, and then you start to, maybe at that point they'd say, well, it just needs to even up. The euro is so oversold that now it's going to balance itself out. So we'll see how that plays out. We'll just have to see if the technicals, we run with those technicals if we see some weakness. Once again, the dollar certainly has been in a good mode up here. Problem is, I think that we should be a lot higher in light of the Fed looking like it's not stopping anytime soon, and then you see the divergence with the other central banks. But we'll see how this goes and plays itself out. We usually spend a little bit more extra time kind of, laying out a game plan on either side with the dollar index. Oh, not only the dollar index, but all the other pairs when it's NFP day. Let's go and take a look at the gold market. Gold has held up very well. We're talking about down here. Same thing here when we're talking about diverging, like we're talking about the dollar. Well, when the dollar's making those new highs and gold came down here into the 90s after pulling back from that 12.19, when the dollar made another run up, you would have thought that we would have been pressured. And we talked about this yesterday, down here into the 80s, and the market held up well. We saw a quick little run up here, then a pull back. I still think this gold market is open to move much higher if we were to see that dollar pullback. We got to see it first, though. Market, if you look at it overall, it is very, very oversold. Once again, we like to widen these areas. I think the area where you'll see the market react is this 12.13. If you hit past that, then it's a quick run to 12.19. I think so. We have to open the door for this move to challenge back to 12.19. If we get past 12.13, that's where they're going to go to. Right there, it's 12.19. So we're going to go with 12.19 as our resistance. This 12.13 actually worked pretty well as the resistance yesterday. I think the high was like 12.80 or something like that. But let's go and move this to 12.19. As far as support, we're going to go with 1194. We talked about that before being a key level on a daily. If you remember, this was a few days back when gold was making that move lower. There's 94. So we're going to use that as our bias chart support belt. Once again, be careful. And we'll see how. Obviously, I'll give you some thought on the positive side as far as the NFP. Now, if we see a good number, let's say we see something like 210 or 218, and then some upward revisions, and then hourly earnings recapture, 0.30, then you're going to go and see this dollar make another run back up. Now, what it does after that is another different story. But once again, keep an eye on that. I think what's going to be key after we saw that pullback from yesterday from last month, when we came in at 157 here. If we get, let's say a 208, something like that, maybe a little bit even better. I mean, better than this 191. Do we see some upside revisions here to say, hey, things are still clipping along? So I think, like I said, it's gonna take something like that. You want to maybe not react to the headline number first, and kind of just digest as far as any revisions, and also the average hourly earnings. Moving into the to the bonds, well, we've rolled over now into the December bonds. We were still sitting with the Septembers. At this point now, the Septembers, they were above this pivot of 4407. But when we look here for resistance, let's say we come in at a weaker number, resistance, we're actually going to move a little bit higher. It's going to be 4422 right there. For the December bonds, 4422. So we can hit some stops. Support, well, you can see the demand coming in right there, 4220. You definitely have a bit of a bid when the equities paired back, but we are going to go and allow in case we were to get a good number. It's going to be right there, 42. Let's move that just a hair high, right there, 4221. Just like we said before, we do have to go and allow for a little bit of a wide area when it comes to NFP. There we go. Yeah, we'll take a look here at the bonds. Obviously, got this big gap when we rolled in from the Septembers into the December bonds. Resistance right now is going to be right there, 60.39. 60.39. Support comes in right there, 60.05. The bonds have been all over the place. We had 59.98 as our support a couple of days back. We went through that into like 59.84, I think it was, and then saw a sharp rally back, which took us all the way up. It basically took us 70 pips higher, almost 70 pips higher. I'm not sure they'd make it all the way back to 59.98 right now. So that would need to hold there, 60.05. Just move that pip higher. And we'll take a look here at the DAX. This market's been into a lot of trouble. We actually had it at 11,895. And we're going to stay with that. And the low was 11,899. Well, okay. 11,898, we had 11,895. So this is off for about 3 ticks or whatever. I'm going to go and keep that 11,895 for right now. Going to keep it. With resistance coming in. Get a little bit of a dead cat bounce. Comes in at 12,080. Currently we're at 11,936. Let's. There we go, right there. Right there, just above that. 11,997. 11,997 is going to be resistance. There we go with the bias chart. And we have some extra time in here. We're going to go over the pairs again. But one of the things, like I said, I want to emphasize again is they're looking for 191 here on non-farm. Last one was 157. Keep an eye on revisions. Since we did come in weaker, we'd like to see some upside revisions. So if the number were to come in at 185 or let's say 178, and then we see revisions to the downside, it's going to certainly, the impression would be that there's going to be a little bit, we're starting to see a little bit of a weakness in the economy. Not a whole lot, just a little bit of concern. And then people are going to start to talk about, well, you know what, now these trade issues is probably going to weigh on the market. And we start to turn the narrative another way. Also, unemployment, average hourly earnings, had a good number this last time. They're expecting only 0.2. 0.2 is not bad. If they can recapture 0.3, shows the market still, economy still plugging away, employment still plugging away. But like I said, I think that's going to be key. Do we get some upside revisions, and are we able to go in and get back up to 0.3? If we were to slip to 0.0, once again, I'm thinking, okay, you've seen a little bit of a pushback. We're not going to be able to see, despite how strong the economy is, we're just not seeing those wage gains. And that, once again, that would put the Fed, or the thinking would be, perception would be that put the Fed on a little bit of a pause after the next hike. That would be the concerns that you'd have, what you'd be looking at with the dollar. Speaking of which, on the dollar, we're still holding above this 195. Looking over here, if we were to break down here and grab a 2-hour close, get this 2-hour close line 95, I think we would resolve ourselves quickly to 94.02 with a move down here 93.72. On the upside, in order to turn things around, if they do, we need to get past this 95.58 on a 2-hour close. That would negate this downside, and technically speaking, opens the door for us to move right back up here again. That's what it would take from a technical standpoint. Going here with the euro. Euro's had a lot of opportunities to go move up. Here we're holding relatively well, but it's susceptible for a pullback. If we do, I think we could gun some stops, and the key area is going to be this 15.52. Very key, not only a daily, but also not only intraday, but daily also, for us to go here. How far could they push over? I guess on an extreme basis, this is where they shoot target not only 52 with some overshoots down here at 32. If we were going to go in that direction, that will put us at the dollar index like around 95.58, which with our dollar index, really looking around that 47 area here, I think people would start to go and take positions fading 48, and then if they start to see it, probably a 15-minute close above 95.58 is where they will look to go in and cover. But that's if, like I said, I think the euro, it's holding up very, very well, but I think it would be susceptible to get some stops. But I think you'll find some good buying coming here with the euro, and we'll see how the rest of it plays out. Take a look here also on the cable. We're slowing down in that same area on a daily, which is huge, 30.27. The pivot's 30.56, but if we can get some further scooting on the upside on the cable, it's 30.84. I think we have it marked on here, is where the rubber meets the road. So if you're playing the cable from the long side, any runs up here, I think that's where you see the market use as a target. I have it here on the daily, the 27. I have an asterisk here. That would be key for further upside for us to go and get up to 27 here on a daily close, to close above that. That would trigger even further more short covering here in the cable. Dollar yen on the upside. Key is going to be that 11.39. If for some reason we get a great number, that's what they're going to go and try and shoot for. That 11.36 is that key daily close. There's a resistance here at 11.39 with support going to come in right there. We have it marked as 10.01 to avoid any confusion. I guess right there was 10.01, well, 10 and a half pip. But I think that's where they would go and make a move to. And if you're looking at the yen, keep an eye on the indices to see if we're seeing further weakness. That's obviously going to give a boost to the yen as a safe haven currency. Gold, as we mentioned. And we're looking here on the daily. We still have this market could come a long, long ways up. We said we don't even get to the 38% until we get to 45, another $40 higher. But like I said, if we do get a good, if we see the dollar start to pare back, the real target, I mean, initially it's 13, but what they'll be shooting for is 12.19. And on the downside, I think it's important for the market to go in and defend, pull this down, to defend 94. 94 is key on a daily also. So that would be an area where they would try and target if we get a strong number. That would be an area where I think you'll start to see some buying coming in, if nothing else, but just plain short covering at that point. Obviously, if we were to get some crazy number, crazy in the sense that, let's say we got something like 252, then everybody would get out of the way. Not that I'm expecting that, but I'm just saying something like that. Everybody would get out of the way of the dollar. We'd rally and we'd see how, where we go there from there. We'd probably make a run up to 95.71 back if we got something like that. But once again, you want to have your all your, look at the extreme parameters, I guess, so that if you saw something like that, at least you have an idea. Where would this market run if I got a very good number? Where would this market potentially run if I got a very weak number? Here with the dollar CAD, we're looking here at 30.67, and that would go in and challenge this break here of this trend line, and would be just about 10 pips above the 50% if we're going to break right here. The market got pretty tired. We already had a phenomenal run from down here all the way up to 32, so really just a respite. And this would be a good area here, the 50% and this level, and also challenging back to the trend line for them to go in and target if we were to see the dollar weaken, the Canadian dollar itself strengthen. That covers it for the day, and Dale should be walking in the door. And thanks for joining us here on the European Crossover.
Nice job, Paulie.
Hey, Dale, how you doing? Thank you.
Good, buddy. Let me ask you, if we had a real strong number, dollar rallied, would you fade that strength? Or if we had a disappointing number like we did yesterday in the ADP and the dollar weakens, would you go with it? What's your buy? Go ahead.
I'm going to go with it. I've been saying this just to give an overview. My thinking is dollars had everything going for it. And one of the things I'll point it to is the daily. We had this rally up here, and we know that the Fed, like Blake is always talked about that from way back when, was, diverging central bank policy. So you think about the Fed raising, the ECB sitting on its laurels, Bank of England, same thing, Bank of Canada, Bank of Japan, you name either one, RBA. So we've had good reason, because we've had fantastic economic numbers, and we've had good unemployment, and yet when we came up here, okay, we had a pretty good rally, so let's go and pull back. We're looking at a daily chart. Okay, makes sense. I'll pull back. So now we're going to find buyers, and we get to a new high and go, okay, we're off and running. More good economic numbers, and we run out of gas. Well, that's fine. So we come back here again, more good economic numbers, Fed's still raising. And lastly, even when Chairman Powell went in front of Humphrey Hawkins, he gave his 2 cents. He wasn't worried about the trade issues with China. So we still couldn't do it until we finally got the break on the Turkish lira news and about Eurozone banks having some exposure. But now here we are fading again. So I don't think the dollar's going to come apart, but can it take a respite? Yeah, and if we do break, I think we could resolve ourselves to 94.02 quickly, with a potential run here down to 93.72. So I would go with the break. I would be looking to fade the dollar unless we got something crazy like 240,000 jobs with upward revisions from last month.
Okay, because there are some people talking about a little mini head and shoulders, with the head being around.
Yeah, I see that.
94.30 and that 95.60 level. If you just waited for 95.50 to sell it every time, you did pretty good. Maybe one time at 95.50 flows through. That would actually measure about 640 if we got through there, that 95.60, right?
It would be. Like you can see it right here, and it looks like it's kind of stretching itself. this left shoulder took a long time, but we saw a rally up to, actually we had resistance 71 a few days ago, and it went right to there, went above the 70 and faded back, and then surprisingly yesterday we came back up. But it seems like every time, to me, when I look at it intraday, it just feels kind of heavy, like it can't pick itself up. And here we are looking at it on the 2-hour chart. We got a little blip yesterday, and quickly, once again, they started to roll right back over again.
Right.
They're just hanging on, and it won't take much to kick grandma down the stairs.
All right, so the head and shoulders I'm talking about is an inverted head and shoulders with the left shoulder. Okay, the left shoulder. Yeah, and that would clean out a lot of dollar bears if we broke out over that. Because that would take it almost back to the old highs, about 640 or 6.6. I see you have a pivot up there around 646. I think that's what it would measure. So just, like you, Paulie, I believe everything will always happen. So always looking at, what would surprise the market the most. And I think finally shaking out 95.50 sellers might be it. So great job this week, man. Come in.
The inaugural week of the European cross.
Yeah. You got one in the books, and good momentum. And a lot of people are appreciating what you do. I know I do. And have a great weekend, buddy. And look forward to the European crossover again next week.
Okay, well, thank you very much, Dale. We appreciate your hard work too.
Thank you, man.